Hello, Chris DiNofia, Movement Mortgage, your mortgage mensch. Hey, today I wanted to talk about no income loans. So when we talk about conventional loans, FHA loans, VA loans, jumbo loans, well, you need to have three certain points of criteria. You need to have income, assets, and credit. It's like a three-legged stool. If you don't have all three, you're going to fall in you know what. So what are the options for people that cannot show income? Maybe they have just retired and all they have is Social Security and a 401k. Maybe they just sold a business and they just have a lot of money, but they don't have any income to show. Maybe they are a self-employed person who has a lot of write-offs because of their business, and at the end they're not showing a whole lot of income. Well, what do you do with these folks? Well, there's a lot of different options. For somebody who's retired and has a large 401k, they can take a draw from that account to the amount that's needed to qualify, and they can use that for income. Now, as long as there's enough money in that account to last 3 years, that's good to go. What about somebody who just sold a business and has a lot of money, or somebody who just maybe sold a house and has a lot of assets? Well, they can do what's called a trust fund loan, put the money into a trust, and then they pay themselves from the trust to use the income to qualify. How about somebody who is self-employed and writes off a lot of their income, a lot of different write-offs? Well, we have what's called bank statement loans is one option, where they look at the deposits from the business and they add up all the cash deposits and they allow them to use a percentage of that to qualify. There are also what's called debt servicing loans, which are going to be based on investment properties, and you look at how much they're receiving in rent, what's the monthly payment, and there has to be typically 100% of both the rent being received and the total mortgage payment. As long as they match, that's a great way to go for those folks as well. And then at the end of the day, there are some stated income loans out there where you're just stating how much you make. Those type of loans are 20% down minimum and at least 12 months of reserves. I am only into responsible lending. When I speak to people about these type of loans, I want to make sure that at the end of the day they can afford the monthly payment. Last thing we ever want to see is someone lose their home. Hey, Chris DiNofia, Movement Mortgage, the Mortgage Mensch. If you want to learn more about this and other types of income, please give me a call. If you're watching us on YouTube, please subscribe. Talk to you soon. Have a fantastic day.